morning and welcome to Business Morning on Channels Television. I'm Ini John Mekwa.
We never expected, Mr. President, that a virus in 2020 will completely
Program today on a sad note. We begin the program today on a sad note as the country mourns the outgoing Secretary General of OPEC, Mr. Mohammed Barakindo, who was just celebrated last night by the President ahead of the end of his tenure on the 31st of this month. We say may his soul rest in perfect peace.
$38 a barrel. And for the first time in history, sellers of oil like ourselves had to pay buyers to take our crude. And then it dawned on everyone that the world needed to act. And act we did because we realized
we do say that
we didn't
may
have
his
to
soul
reinvent the
rest in perfect peace as we mourn with his family members. Well, the Bureau of Public Enterprises, the BPE, has announced the restructuring of Kano, Ibadan, Benin, Kaduna, and Port Harcourt electricity distribution companies in the country. The BPE's announcement follows Fidelity Bank's activation of the call on the collateralization shares of Kano, Benin, and Kaduna discos over their inability to repay loans obtained to pay for assets acquired in the 2013 privatization exercise. BPE says the Asset Management Corporation of Nigeria, AMCON, will be a placeholder board for the Ibadan Disco in a temporary capacity, while the Port Harcourt Disco undergoes restructuring to prevent its imminent insolvency. Well, for some industry players, this does not come as a surprise. One of such persons is Professor Yemi Oke. He's Professor of Energy, Electricity Law at the University of Lagos, and he joins us now to share his thoughts with us. Good morning, Prof. Good to have you on the show.
Thank you very much. Thanks for having me.
Yeah, so this doesn't come as a surprise because I know you've been having conversations around this where we see banks taking over because of the burden of sustaining, funding the discos.
Yes, definitely. It doesn't come to me as a surprise at all. It's been predicted. What actually happened was at the time of power sector acquisition, definitely the process was kind of filled with the needless secrecy, and the entities that actually acquired didn't repatriate funds. So the mop up funds to acquire those entities. And a lot of Nigerian banks were needlessly exposed in terms of a single obligor limit to power sector. And the money was released to them in dollars, and they were supposed to be generating naira. And that's one of the challenges we have in the power sector because they can't meet up. Dollar rate now is about 6.13 or unofficial rate as against the loans that were procured at 161 to dollar. And Nigerians are not ready for further increase in tariffs because they're not even getting supplies. A lot of Nigerian banks are actually exposed to power sector. So we expect that there will be another round of reacquisition and refinancing in the power sector because what has been done wrongly ought to be revisited so that we can get it done correctly. I anticipated like 5 banks would go down. 3 already went down. One just announced its vulnerability, and all is not well. And these are predictions that have been out there for close to a decade. So the power sector is challenged.
All right, Prof. This is obviously a conversation that is just starting because we also hear that some chairmen have been appointed by the bank and independent chairman by the BP also, to overlook operations of those discos. But thank you so much for your time. I know that we'll be engaging you a whole lot more on this issue.
Thank you. Thanks for having me.
Well, there you go. Some changes coming to the electricity supply sector, and we wonder how that will affect you. Well, all you have to do is stay here on Business Morning and Channels Television generally, and you will get that. Moving to other issues now. Earlier this week, the Acting Director General of the Infrastructure Concession Regulatory Commission disclosed that since 2021, the agency had prepared 51 eligible and bankable public-private partnership projects worth $17 billion. But guess what? They don't have bidders. Why is that, and what's the way forward? We'll have that conversation after this break. Do stay with us. I'll be having with Damilare Ashimiyu, Investment Associate at AfriInvest Research and Consulting. But that'll be after the break. Join us again. You're welcome back. You're still watching Business Morning on Channels Television. So why does it look like the PPP is not, or the PPP projects are not so attractive to bidders? Damilare joins us now. Hi, Damilare. Good morning.
Yeah, good morning, Hini. Thanks for having me on the show.
Good to have you. So what do you think is responsible for this seemingly lack of interest, by bidders?
Yeah, thank you once again. Yeah, so why this development is actually not a cheering news, given the huge infrastructure deficit in Nigeria, which is estimated at about $3 trillion. I'm sure we need a very effective adding machine to convert that to Naira. But the truth of the matter is that this trend may actually persist so long Nigeria refuses to play to the basic investment rule book. And the basic investment rule book globally is the fact that investors will only be willing to put their resources where their scenario analysis has shown that the risk-return profile is encouraging. Or what I mean is that where investors see that the potential return from the risk they are intending to take by investing in a project, a PPP project in a country, is actually outweighing the potential cost or risk. But in the case of Nigeria, there have been a lot of factors that have been highlighted over the years, which we have not really made much progress in addressing them. And I would speak to like 3 or 4 factors that are actually driving this lack of interest by investors in Nigeria's public-private partnership initiatives. In a 2017 blog post on the World Bank blog tied to Nigeria, trying to get it right with PPP, the leading factor that was highlighted as the reason why investors are not interested in having a PPP arrangement in Nigeria is the fact that we have an ambiguous PPP laws, and that position was actually given by some global investors that the World Bank interviewed concerning Nigeria. Yes, the ease of registering business in Nigeria has improved. At least before this administration came, Nigeria ranked about 170 out of 190 countries in terms of ease of doing business. Now, before the World Bank discontinued that metric last September, we are now at 131 out of 190 countries. But the truth is that what has actually improved in terms of our ease of doing business ranking is just the ease of registering business, not the success factors that every businesses need to operate smoothly in Nigeria. You still have the power problem. You still have the bureaucratic processes at different government agencies. So these are factors that our investors will always consider. And we also have a problem of policy flip-flop. And I will also give maybe 1 or 2 examples around that. We all recall some years back, we have this Olokola free trade zone, being set up in Ogun State by the previous, the administration before the last one. And a lot of investors from, outside of the country in the oil and gas space have actually, put a lot into this project before the past administration in the state came and put a hand to that initiative. Those are things that discourages investors. Another example of a failed PPP effort by Nigeria in the past is even this Lagos-Ibadan Express Road was initially a concession in 2012 by the prior administration, but that was put to stop. Much has not been done in that case. But again, these are investors will look at, I will not really be comfortable. Even the Lekki toll here, when the concession was initially made, the company managing that was supposed to manage it till 2034. But last year, the government boxed them to corner to, pay them out they renegotiated the term and paid them out at a rate that may not be as high as what they initially agreed. So these are kind of antecedents that investors don't like. And we also have a lot of monetary policy that, they want to be keeping investors by the sideline. We have aggressive capital control measures in this country. It's easy to move in your dollars, but when it gets into the country, it becomes a difficult thing. And we also have a problem of insecurity. So these are the basic factors. These are the basic items that typically investors will look at, and if before taking a long term, because anything that has to do with PPP project is a long-term investment. It's not hot money like investment in equities that you can pull out in a week. And so investors will always weigh the cost and benefit of what they are trying to do. And once it's not favorable, even no matter how bankable the idea is, you always see a drawback. And this is actually not a good development, given that we have huge infrastructure deficits.
Well, a lot of factors you've noted there, and well, unfortunately, these are things that are just out there and a lot of people would see. But for you, obviously, all of them cannot be solved at the same time. But what are the low-hanging fruits from your perspective that you think can be easily fixed, to get people interested, especially because of infrastructure?
Yeah, so the quick one of the few low-hanging fruits that we need to actually address on time is removing of bureaucratic process in our processing of investment events. I mean, a lot of if you check the website of the Nigeria Infrastructure Regulatory Commission, you observe that the last time some projects there were, investors last showed interest was 2020, which is almost 2 years. So there are a lot of bureaucratic process with Nigeria, with processing things in Nigeria. I also want to believe that if we can improve on that, whereby processes can, business processes can be enhanced and be consummated at a very quick time, this will encourage investors. But I think one of the key low-hanging fruit also that needs to be considered very urgently is our aggressive capital control measures. So investors are always wary of that. We have some challenges in-house, but the moment you also have a very tight capital control measures, and you are not ready to reverse that, investors will always be wary of coming to your country. So I think these are two quick low-hanging fruit that we can fix, and begin to have foreign investors, showing interest in our PPP arrangement, which is what we actually need now to bridge our infrastructure gap.
Yeah, so this is election period. Election is just a couple of months away, and so we see the political scene really heated up, and attention has mostly turned there. So a lot of times, these are not times when investors will be interested in a country because of the uncertainty. And then you also mentioned the flip-flop in policies. Don't you think we should also look at the legal area, perhaps have a law or something to compel subsequent administrations not to tamper, with agreements and arrangements in the PPP area?
Yeah, I quite agree with you. And I think that is also in sync with the major factor I highlighted earlier, that we have ambiguous PPP laws. Our laws made it easy for government to, a change of government to unanimously or unilaterally just decide to end an existing agreement, which will impact negatively on a business that has put a lot into investment in a country. So I think you are very correct. And even if you also look at it from the perspective of even our tax law, I know a study by one of our PwC leading tax partner recently showed that Nigerian companies are paying one of the highest business taxes in the world. We have almost 6 different taxes on there. We have the CIT, 30%. We have 2.5 from education. We have police levy of 0.05. We have NASENI levy. We have recently introduced NYSC levy, aggregating, taxes on businesses to about 35%. That is one of the highest you can get anywhere in the world. So I think I agree with you. We need to look into our laws regulating our PPP arrangement and even our legislation around taxes, because until these are fixed, I mean, we may struggle to attract investors into the country to bring in that huge investment that we need. And unfortunately for us, rather, at a time like this where Europe is badly in need of gas, which is abundantly available in Nigeria, we need investment, even in the area of pipeline to run gases from Nigeria to Niger, Algeria to Europe. But if our business environment is not palatable enough, if it is not encouraging and attractive to investors to bring in their money, we may not see this. So we need to look at our laws and even our tax policies to fix things.
Yeah, well, maybe we should also look inward. So apart from expecting their investors outside the country to get interested, maybe we should also look for a way to attract more local investors. I mean, every time we talk about the infrastructure attempts, the PPP infrastructure, you know, the one with the tax rebate, it seems it's only Dangote we're talking about. Maybe if the demands or requirements either for funding or some of the requirements were lowered, we could have smaller firms, organization get interested and participate in it.
Yeah, what I agree with you. I think that if you look at the kind of infrastructure deficit we have in Nigeria, how many small businesses will have the kind of financial capacity to fund them? We're talking about infrastructure deficit of $3 trillion US. If you put that in Naira, multiply by the current exchange rate of 40, that'll blow off your calculator. So we only have few big, deep pocket players in Nigeria that can actually do this. And many of even the few ones are into a lot of projects. Yes, Dangote was the one that took a tax relief or so to fix this Oshodi Road. But you agree with me that Dangote also has a project that is ongoing, that he is also borrowing. And if you don't look at other small or medium-sized businesses who have actually been squeezed by multiple taxes, by high cost of businesses, what kind of PPP arrangement would you think those ones would be willing to push? So I think there is no way we can actually develop our infrastructure on our own. It is surprising for you to know that a single business in the US, Elon Musk, paid a tax that the size of the tax last year was, was bigger than combined of IGR of all the 36 states in Nigeria. So that shows you that we actually don't have so many big businesses in Nigeria. The middle-sized businesses and the small-sized businesses are even struggling to survive. We can count numbers of businesses that have packed their loads and leave the shores of Nigeria because of how difficult it is. The medium-sized ones that have not left is because they don't have any option. They are still struggling to survive, trying to take advantage of initiatives like the AFTA and what have you, find their food. So we actually don't have that financial strength in-house. We need that external financing, especially given the fact that the value of our currency is low there.
Wow, so that's another work, obviously, to get the businesses standing strong first. Then we can now expect that from them. Thank you so much, Damilare Ashimiu, Investment Associate at AfriInvest Research and Consulting. Thank you for being a part of the show. Enjoy the rest of your day.
Thanks for having me.
After the break, AFEX Commodities Market is next. Still here on Business Morning in Channels Television. You're welcome back. It's AFEX time. A mixed summary is what we see for the week ended 4th of July. Well, we have David Ibidapo, the head markets, data and research at AFEX, to give us the details. Hi, David. Good morning.
And good morning, Hini.
Yeah, great. So I'm great. Thank you so much. So let's have the details of the week ended the 4th of July.
Okay, thank you, Hini, for that. So when we look at the last week that just ended, so we saw that across a lot of commodities, it was a red week for most of the commodities, right? So about 12.7 million contracts were settled on the floor of the exchange, which was about 68% when compared to upper week of 40.8 million contracts that were settled that week, right? And these contracts were valued at 7.8 billion naira, which is also like 19% 0.8% lesser, or a decline compared to the upper week, right? Our benchmark index, which is the AFEX Commodities Index, closed at 465.90 index points, which was a marginal decline by 1.30 week on week. And our AEI, we saw a marginal increase in our AEI index points, which closed at 189.68, which was a marginal increase by 0.02 from the previous week, right? When you look at the composition of the volumes that was traded across commodities on the exchange, you see that sorghum actually accounted for more than 70% of the total volume that was traded on the exchange, and we put that number at 3.4 million contracts of sorghum. Cocoa. Cocoa accounted for 4.8 million during that period. In the last week, we saw that ginger actually topped the gainers chart, the only commodity that recorded a positive week-on-week performance. So ginger closed at 1,189 naira, which is 17.77% when you compare it on a week-on-week basis. However, for other commodities, it was a decline across all the commodities during the week. Sorghum dipped by 25.57%, closing at 214 naira.54 kobo. Cocoa was down by 21%, 21.28% roughly, and closed at 978.69 naira. Sesame was down by 11.32% and closed by 680.01. Then we saw paddy rice also decline by 7.04% and closed at around 226.77 naira. Then also we saw cashew. Cashew was down by 9.93% and closed by 616.83 naira. And maize, which is the last but not the least, maize closed around was down 0.04%, which closed around 225 naira per contract. Then soybean recorded a muted performance week on week, retaining its earlier price of 421 naira.83 kobo. If you want to trade on our exchange, you can download our COMEX app, which is available both on Android devices and also on iOS devices, App Store, right? And also, if you want to learn more about the commodities market, you can visit our website, www.africanexchange.com. Thank you.
All right, thank you so much, David. Well, let's review how the commodities market performed in the first half of the year, and then probably we'll have some time to do a little bit of outlook for the next half. So from AFEX perspective, how did the market fare in the first half of 2022?
Okay, thanks, Ini. In the first half of 2022, I think what I would say is the major highlight for that part of the year was the Russia-Ukraine crisis, and we saw a lot of supply chain disruption in the global space, which led to a number of commodities record historically higher prices during that period, right? So if you take a look at Brent crude oil price, you see that Brent crude oil price is about $104 per barrel. When you compare it to the price of Brent crude oil last year, that's about 42% year on year, and this is the highest price that we've seen historically since 2013, right? When we fast forward to wheat price, you can see that also wheat price in the global space has accelerated by more than 40%, and also we can see that fertilizer prices has also more than doubled, right, during the same period, right? We've seen this stoke or induce inflationary pressure across the globe, right? Nigeria not exempted, right? And we've seen a lot of central bankers taking a hawkish stance to fight and ameliorate the effect of the inflationary pressure, specifically in the food aspect, right? Then we've also seen across Africa food makers take position by increasing their demand for substitute commodities, which has little effect, which we saw little effect of the Russian-Ukraine crisis on, right? Then when we come to the Nigerian space, we could see that between the start of the season till around January, the ending of January, we saw large spikes in prices of commodities, especially grain commodities, and this was largely induced by the buy pressure, the demand pressure from large buyers and processors, the millers, right, which drove most grain commodities prices by about, on the average, around 20%, right? However, in February to March, to the end of Q1 2022, we saw prices began to decline, and reasons being that most of these large buyers were already exiting the market. They had already purchased a lot of what they would need for as inventory for the year, right? And that way we saw prices began to decline, and across most of these commodities, prices declined by about 7 to 10%, right, on the average. We didn't really see the impact of the Russia-Ukraine crisis directly on the grains market, and that's because of the timing of the crisis, right? The crisis started around February 24th, which was the period when most of these large buyers, right, were no longer in the market. So we saw just some mild effects, right, on the price of commodities. However, fast forwarding to the second quarter of the year, we saw that most grain commodity prices started picking up due to the Ramadan effect, so the fasting period, which reduced a number of activities in the open market, right? However, this pressure on prices was actually short-lived, and we saw a reversal, that's a decline, right, towards the end of the quarter. However, towards the end of the second quarter, we started seeing a little pickup in prices of commodities as farmers resume that planting season, which typically they would have to buy grains to start planting. So that little buy pressure actually saw some price of commodities began to increase, but marginally.
All right, so what should we expect in the next 6 months, especially in terms of production, volume, and price?
Yeah, so our outlook for the next 6 months is bleak bleak actually. So let me put it this way, right? For production and for prices, right? You know, a major pass-through for the Russia and Ukraine crisis is actually to Nigeria, is actually in terms of the wheat price and also the fertilizer prices, which have actually gone up. Fertilizer prices has more than doubled. We've seen wheat prices increase by more than 40%, right? Which will naturally induce a shift in demand to other close substitutes, right? And so we are betting that we are going to see a lagging effect of this impact on after H2, right? This year, because now the farmers have resumed planting, right? So they would have to buy fertilizers at a higher price, which will lead to higher cost of commodities at the end of the day, right? So we are betting that production, because historically when you check the numbers, right, every year where we had seen spike in fertilizer prices, there's always a significant reduction in fertilizer consumption in Nigeria, right? And we all understand, and you can agree with me that fertilizer as an input it's key in increasing productivity, in increasing output for the year, right? So we are betting that production levels will be lower this year across major grains, right? Across major commodities, right? And this because of farmers would likely use less fertilizers this year. Then also we've seen a lot of farmers begin to opt for local seeds varieties as opposed to improved seeds, which is also significant in improving productivity and output, right? So, and you should know that once we are anticipating lower output this year, it will also have an effect on prices of commodities. commodities, because low supply in the market amid an existing high demand, right, would actually stoke up prices of commodities, right? So we are betting that the price of commodities this in H2, at least in the new season, would actually rise. So we should be expecting new historical highs, right, upon harvest in the next season. And also lower production
David,
across
David,
commodities.
we're almost out of time. So just very briefly, how is AFEX positioning itself for the second half? Just very briefly, because we are out of time already.
Okay, so at AFEX, one of the things we are doing is to ensure that we still intensify our efforts in input financing for this year, so that our farmers can at least get enough inputs, right, to deploy in this year's planting season, right? And also, you would agree with me that the threat to food security across Africa is actually increasing day by day, year on year. We can't bet that there won't be another crisis next year, right? So one of the things we are trying to do also is to see how we can replicate our models across a lot of African countries, right? By expanding into these countries and seeing how we can replicate our models and ensure that we feed Africa and we ameliorate the challenges that are faced by smallholder farmers across Africa.
David.
Thank you.
All right, David. We do hope that you will feed Nigeria first before feeding Africa. I mean, a lot of countries are practicing crop protectionism. So thank you so much, David Ibidapo, Head Marketing, Data and Research at AFEX. Thank you for your time.
Yeah, thank you very much, Ini.
We'll take a moment, so we'll be back to head to the markets. Welcome back. Let's head to the markets now. We have Will back. Will, good morning. Good to have you back.
Hey, good morning. It is good to be back. But back on a bearish note, I don't think I want to be back on this note because I want the market to be green. Sentiments have remained bearish in the equities market. We saw Monday's 0.07% decline. Now, yesterday, we saw 0.4% decline. That's a huge one. You know, the market continues to lose. After being declared, you know, one of the second best, performing stocks in the world, stock market in the world, and after boost, trading almost 480 billion naira in equities, $1 trillion naira traded for the first half of the year. Now we see that the all share index is at 0.40% down yesterday at 51,586.50 points. Equity is at the 27 trillion naira mark there, and the month-to-date loss has, dipped further to 0.5%, while the year-to-date return has moderated to about 20.8%. Now, total volume of transactions yesterday, we saw volume up yesterday about 20% to 234.61 million units. Now, value was down yesterday, also with deals. We saw 2.58 billion naira traded yesterday and exchanging over 4,600 deals. Chemical, Allied, and Products Limited was the most traded stock by volume at 29.32 million units, while GTCO followed suit, and it was also the most traded stock by value yesterday at 592,000 million naira yesterday. Now, sectoral performance, we saw the banking, consumer, insurance, all down. Industrial goods was the only gainer, but it was up marginally, 0.01%. That's almost flattish. Oil and gas was unchanged from its closing figures on Monday. Now we have Phil Anegbe. He's the head research at Cardinal Stone Securities to give us more insights on what's going on in the markets. Good morning, Phil.
Yeah, good morning. Thank you for having me.
Now, Phil, it's been quite volatile at the equities market. Lots of bloody days we've been seeing, just a few greeners there, here and there. What is the current market sentiment?
Well, you were right to say that the market was in a world of its own in terms of its gain relative to other markets, positive 20% year to date. So you expect that there will be bouts of volatility, people coming in to take some profit in some names, or reacting to some near-term information. But those volatilities are important to us for traders, essentially, because it provides entry opportunities, particularly for those who missed out on earlier rallies. So if you still have a view of benefiting from the market in the next 6 to 9 months, we think that the recent retreats or profit taking are presenting decent entry opportunities, particularly for banking names and a few other stocks.
So do you think the market is going to get some reprieve from intense profit taking? You see the market going up. Is there any trigger, anything going to trigger the market to positive territory for the rest of the week?
Well, for stocks that are fundamentally sound, we think that we'll continue to see volatilities. After these bouts of profit taking, you expect volatilities to continue. They are going to present opportunities for upside in names like WAPCO, usual suspect, Danksem, MTN. You're likely going to see some positive returns or performances from them, particularly edging towards the release of their Q2 results. For stocks like Presco and Okomu, they are likely going to be positive sentiments ahead of their results, which we expect sometime towards before the end of July, right? So you expect that for fundamentally sound names, there are likely to be positive retreats on them, right, prior to the release of their results and just after the release of their results. Positive reaction, because those earnings are likely to be very good.
Okay, so you're talking about earnings and you're talking about big names. Now, Red Star Express emerged as the top gainer yesterday. Are we looking at a dark horse here?
Well, there are a couple of dark horses we've seen across the markets, inspired by different factors. You mentioned the Red Star there, but then there are other names that also performed decently this year, and I think for even in as much as last year, right? Things stocks like Vitafoam, they are going to the release of their results. You expect that they will perform well because their earnings have also been very robust in recent times. So there are likely to be a couple of dark horses here and there. Vitafoam being one of them. You mentioned Red Star Express, but we see how events pan out towards the release of these results.
Okay, thank you so much, Phil Anegbe, for sharing your insights on the program. Phil Anegbe, Head Research, Cardinal Stone Securities Limited. So we head straight to where look at the NASD market as the unlisted securities market, and we saw that it traded in opposite direction yesterday, 0.05% up at 773.89 points, still at the 1.02 trillion naira mark, and the volume fairly unchanged from what it traded on Monday. 535,515 units of stocks traded and valued at 33.35 million units, all in 27 deals. So the bond market was also similarly, traded quietly yesterday, and we've seen little or no activity on that side. Treasury bills, however, was a boost. We saw yields going up to the 9 points yesterday. All similarly for the CBN special bills, yields are going up. Bearish sentiments happening in the fixed income space, and we hope to see more happening. But inflation probably is eroding most of the gains that we're seeing there. But analysts expect active session this week on treasury bills and the bond market. Yeah,
so we've been waiting like forever for this FAC payment, to bring us some sort of activity in the market. I guess it's trickling in now towards the end of the week.
We're seeing the impact.
And then maybe before that settles, then we'll also have the MPC coming in the next 2 weeks, and that would also bring some movements in the market. But thank you so much, Will, for giving us updates in the markets.
No worries, thank you.
We'll take a break now. When we come back from that break, we'll head straight to London. This is Business Morning on Channels Television. In the UK now, well, I guess one of the hottest stories at this time is the resignation of Sajid Javid and the Rishi Sunak, the Chancellor. And Juliana, good morning. You've been really busy since yesterday. You were on the news at 10. You were on Russian invasion this morning, and it's all about this. I know that these two are saying that they are not comfortable with the style of governance of Prime Minister Boris Johnson, but I mean, they're not just joining the cabinet today. Is this connected in any way to the vote of confidence scenario we had?
Absolutely, it is. Good morning, Innie. I know everybody's talking about those two big names, those shock resignations that we received in tangent, 10 minutes apart yesterday evening, of Rishi Sunak, the Chancellor of the Exchequer, and Sajid Javid, the Health Secretary. But the breaking news is coming thick and fast. In the past hour, there have been 15 resignations from various departments within Whitehall. We're talking about private secretaries, we're talking about junior ministers. Many people that were once staunch allies of the Prime Minister have now come out saying they have no confidence in him. So it's not just those two incredibly senior figures. It does appear to be collapsing around Prime Minister Boris Johnson as we speak, and there are two very public appearances we are expecting from the Prime Minister in a couple of hours. First of all, PMQs, where he will be facing his arch rivals in politics, the Labour leader, Sir Keir Starmer, as well as the leader of the SNP, the Scottish Nationalist Party, Ian Blackford. That's taking place in a couple of hours. And then he has a cross-party select committee hearing on Partygate, on standards of public life. Is Prime Minister Boris Johnson going to be able to survive the evening? That's what a lot of people are asking. In fact, bookmakers across the country have started to stopped taking bets on whether or not the Prime Minister is going to survive because so many people don't think he will. It's been an incredible, difficult 24 hours for him, and it does appear to get worse. Now, I came downstairs to come and get ready for this about 15 minutes ago, so I suspect that in the past 15 minutes more breaking news has occurred. But this isn't just about Partygate. This isn't just about the gas that he's made over the past couple of years. It's now linked to sexual harassment. So many Conservative MPs have been ousted over the past couple of weeks, most notably Chris Pincher last night, where the Prime Minister yet again made another televised grovelling apology about misleading the public or misleading parliamentarians when he promoted Chris Pincher to the Deputy Chief Whip when he knew that there were long-standing allegations about him in sexual harassment. And some people just think, you know, it's enough now and it's time for him to go. But we'll just have to wait and see when that is going to happen.
Yeah, well, I wanted to say, Juliana, perhaps you have become a prophet of some sort, because I remember when we talked about the vote of confidence and he survived it, and you said, well, when you look down history, you hardly get any prime minister who stays, you know. So let's wait and see, as you have said, and we'll have that conversation at 1:30.
Thanks, Innie.
So we head to the crypto space now, but I think we have the crypto space.
Yeah, so Innie, guess we're looking at the markets now. We're seeing a fear greed index. We'll continue with the markets right now. We see it at 18 points, extreme fear still in this market, but an improvement from yesterday. And we see the market cap, $902.47 billion. That's down about 1.68%. Volume traded, $66.69 billion. About 14.58%. We see Bitcoin dominance there, inching up about 42.37%. It's been ranging between the 41% and 43% range for about a month now. And we're seeing price of Bitcoin this morning, $19,959 at 8 a.m. this morning. That's down about 1.91%. Volume traded $28.47 billion. But we're seeing Bitcoin holding on to that 20K at this hour of trading. Price of Ethereum there, down about 3.22%. Volume traded $17.92 billion. And we see it's just eCash there up this morning, 6.41%. BNB down 1.25%. It's a mixed bag, and we're seeing in this market right now with Cardano trading at trading down 2.56%, and XRP still holding on to that 30 cents range. Who knows if this 30-cent range will break for XRP? Remains to be seen. All right, let's bring in Gilbert Jokpata now, financial market analyst. Hello, Gilbert.
Yeah, good morning, Mr. Ladi.
Good morning, Gilbert. Great to
you.
have you. Yeah, so we're seeing a yo-yo movement with the price of Bitcoin, at this time. What's driving sentiment, and do you think that 20K level is going to hold this week?
Well, I think at this point, anything will, and anything could, and anything will happen. We already seen that the market has been making a couple of short-term relief rally to the upside, which is not strange, because we will always see more buyers stepping in at some point, but the bears always have the day more at the end of the day. But if I'm really looking at what will be the outcome of price at this point will be if more buyers will have more short-term confidence. So if there's more short-term confidence and more buyers step into the market, it's possible the 20K may hold.
Right, and talking about the crypto industry now, we're seeing a lot of bailouts happen. We're seeing most of these lending companies liquidating, at this point, not able to fulfill, their responsibilities. And now we're seeing Binance talking about, bailing out about 50 companies. Is this a sign of things to come?
Okay, the cryptocurrency industry is filled with people who love decentralization. This means that we are not great lovers of control, centralization, or people thinking for us. And this is how we were able to create a market that does not need government bailout. But this does not mean that we will not be faced with financial challenges like this as an industry. But these are all signs of people who think for themselves. And this bear market has proven that the industry has become more matured. Binance disclosure is showing us a place of strength. It's showing us that the industry is gently building a life raft for himself. And this is not just coming from Binance alone. We have also saw Sam Bankman, the CEO of FTX, also stepping in. So I think at this point, larger exchanges, which should I say are acting more like the bigger, a kind of the opposite of what central bank will do, are stepping in at this point to, should I say, the industry itself is bailing out companies, not companies that are not doing well. When I mean doing well, companies with little utility. They're actually stepping in to bail out companies that are doing well with good utility but don't have enough cash on its reserve. Because the reason why we could still see Binance stepping in, FTX also stepping in, is because during the bull market, they were able to still stack enough cash reserve and not go being all on assets. So a whole of these other smaller companies are facing liquidity crisis because a whole lot of their reserve is in assets. So if we are going to see more of this come, I think yes. And this is more like a playbook or a model for other crypto-based companies that during the bull market, they should also stack up cash reserve for the coming bear season.
Quite interesting. It shows that most of these companies cannot survive, a bear market. They do well, when it's a bull season. But what kind of regulator do you think the crypto industry needs at this point? Is it self-regulation or some external regulator?
While I believe there are different debates for the kind of regulators that should come in, even some players in the industry are calling for government regulators stepping in. I think if we must be able to create more of a free market with a high level of self-governance and free market, we rather need more of a self-regulation.
Right.
If we could make regulations on codes and be implemented, it will do the market better than external regulators.
Quite interesting. Regulation is needed, in any market. Thank you so much, Gilbert Jupata, financial market analyst.
I agree. Regulators are
very
really
much
needed at this point. We need them.
All right, now let's look at the top 5 gainers. We see CVX there leading that counters up 14.09%, and we see eCash there up 6.44%, less than a cent, and Sandbox back in the top gainers list again, up 1.69%. So the market is not looking so bad, but there's still cautious, optimism in this market.
Yeah, well, it's in every market at this time. Thank you so much,
really,
Ladi. Yeah, thank you for that update. Well, that's it on the program for this midweek edition. We'll continue the journey tomorrow. I mean, John Mekwa, but do remember at 1:30, Ladi will be here. Sorry, will be here for Business Incorporated. So you get updates from the world of business at 1:30. I'll see you tomorrow, Amini, John Mekwa.